The Trump tariff Fed bailout? Is it possible? What if I told you that Donald Trump's proposed tariffs might force the Federal Reserve into a stealth bailout? In this video, we're going to break down what Trump's new tariff plan actually is, why it could destabilize the U.S. economy, and how the Fed might be forced to step in, quietly bailing out the damage. Let's get into it. Chapter 1. What Trump is proposing. Let's start with the basics. Donald Trump has proposed a universal 10% tariff on all imported goods, no matter where they come from. This means whether it's cars from Japan, clothes from Vietnam, or electronics from China, everything imported would be taxed at 10% at the border. Now, that sounds like a simple way to boost American manufacturing. But the reality is, this hits every consumer and every business that relies on global supply chains. And that includes most of the economy. Here's what happens when you slap a 10% tariff across the board. Prices go up. U.S. companies pay more for materials and parts. Retailers pass that cost on to consumers. Inflation goes up. Fast. But that's only the beginning. Chapter 2. The inflation problem. Tariffs are basically a tax on imports. But who pays that tax? You do. The consumer. Let's say you buy a phone that costs $1,000. After a 10% tariff, that same phone could cost $1,100, even if it's assembled in the U.S. because the parts are imported. This kind of across-the-board price increase could spike inflation. And remember, we just spent the last 2 years trying to cool inflation. If tariffs reignite inflation in 2025 or 2026, the Fed will be caught in a trap. Chapter 3. The Fed's dilemma. The Federal Reserve has two jobs: keep inflation low, keep the economy growing. But here's the catch. Tariffs can mess with both. If tariffs raise prices, inflation goes up. If inflation goes up too fast, consumers spend less, businesses invest less, and growth slows. That's called stagflation, and the Fed hates it. So what does the Fed do? That's where the bailout idea comes in. Chapter 4. What the Fed might do. Let's say Trump's tariffs go into effect. Within a few months, inflation picks up. GDP slows down. The market starts to panic. Treasury yields spike because foreign investors, especially countries like China, start dumping U.S. debt in retaliation. At that point, the Fed may be forced to intervene to stabilize markets. How? There are three main tools. 1. Cut interest rates to stimulate the economy, even if inflation is high. 2. Buy government bonds to lower long-term rates and calm the bond market. 3. Backstop corporate credit. If business defaults start to rise, none of this would be branded a bailout. But in practice, the Fed would be smoothing over the damage caused by tariffs, effectively bailing out the economy without saying it out loud. That's the stealth bailout. Chapter 5. Why this could actually happen. Some people think this is just political theory, but it's not. We've seen this playbook before. Back in 2018 and 2019, Trump imposed tariffs on China. And what did the Fed do? They cut rates 3 times in 2019, even though the economy was still growing. Why? Because the trade war spooked markets. Growth was slowing. Manufacturing dipped into recession. So the Fed stepped in, not to save Trump, but to prevent broader damage. Now imagine that, but even bigger. Tariffs on every country, not just China. The Fed might have no choice but to act again. Chapter 6. The China angle. There's one more piece to this. If Trump brings back tariffs, especially with tough rhetoric on China, Beijing could retaliate, not just with tariffs of their own, but by selling U.S. Treasury bonds. China owns over $800 billion in U.S. debt. If they start dumping bonds in protest, yields would rise, and that would send shockwaves through the financial system. Guess who would have to step in? That's right, the Fed. They'd likely step in to buy treasuries to keep rates from spiraling. Again, not a bailout in name, but a bailout in function. Chapter 7. Is this a bad thing? So is this all bad? Not necessarily. Some argue that bringing manufacturing back to the US is worth short-term pain. Others say the Fed should step in to smooth volatility anyway. But here's what's important. You, as a voter or investor, need to understand what's really happening. A tariff policy that sounds strong and simple could have huge ripple effects, and the Fed may be left cleaning up the mess behind the scenes. And that's why people are starting to call this a Trump tariff-Fed bailout, because if the tariffs trigger inflation and slow growth, the Fed becomes the emergency backup, whether it wants to or not. Final thoughts. Trump's 10% tariff plan might sound good to voters, but it could create a dangerous economic puzzle. Higher inflation, slower growth, rising debt costs, and a Federal Reserve caught in the middle. The Fed won't call it a bailout, but if they start cutting rates, buying bonds, and propping up credit just to prevent a tariff-driven recession, well, call it what you want. That's a stealth bailout. And the craziest part? It could all happen without anyone voting on it. If you found this helpful, hit the like button and subscribe for more deep dives into economic trends, politics, and policy. Drop a comment below. Do you think the Fed will have to bail out Trump's tariff policy, or will the U.S. economy power through? Thanks for watching.